Hopefully, hopefully it's working. Hello, viewers. Between my day job as a financial planner, uh, starting running a huge event that's coming up later this, actually in a few weeks, and getting people to come out, going to events and meeting with my clients on a regular basis, and taking my wife to a dentist today, I'm finding it very challenging to keep on creating content that is relevant. So I apologize. I'm in my car. I've created a little bit before I drove here. I basically came up with five things to talk to you about in terms of what Canadians should know. Five things Canadians should know about RRIF accounts. And I've not memorized it, so I've got my bullet points here. So I'm going to talk about that. And I guess might be the way that I'm going to be posting stuff on this channel, because I don't really have the time to sit in the studio to vet stuff, like long videos and render them and all that stuff. So I hope this works for you. Without further ado, let's get going. Five things that Canadians should know about RRIF accounts. The first one is a basic one that you probably all know, but just to reiterate, that's the next step after an RRSP. The RRSP is the Registered Retirement Savings Plan, and you can no longer have one of those by the December 31st of the year you turn 71. It must be converted to a Registered Retirement Income Fund, or a RRIF. So the RRIF account, you can start it earlier than 71. A lot of people have that misconception that at age 71, that's when they have to convert it. No, you can convert it earlier, but that's a topic of another video. And that's something that we sometimes talk about, tax planning or planning on income streams that might be earlier than 71 that might benefit you tax-wise. Okay, so if you want to know more about that, please put some comments that, hey, I want to know more about that, and I'll create a video on that. I intend to keep on creating video content that people want to see, so please use the comment section. The next thing, you must make minimum annual withdrawals, and there's no more new contributions. So with an RRSP, as long as you had contribution room, you could make contributions. But now with a RRIF, I'm going to keep on saying RRIF instead of Registered Retirement Income Fund. I'm sure you know what it is now. You can no longer make contributions. You can only make withdrawals. And there are minimum required withdrawals that are stipulated by the government. There's a percentage that is announced, basically, or confirmed yearly, and that percentage will be based on your age that you must take out every year. If you're age 71, there's a percentage that you have to take out of the value of your RRIF. So whatever the value of your RRIF was on December the 31st the previous year. So if this year you're turning 71, then December 31st of this year, the value of your RRIF on that date is what will be used to calculate the minimum withdrawal that will come out when you turn the next year when you turn 72. And you have to take it out. It has to be pushed out to you, actually. Even if you do nothing, the bank or wherever your financial institution is will push it out to you in form of a check to your mailing address, or if you have a bank account on file, whatever. And that minimum withdrawal does not have to be withheld any tax. It is still considered income, so you have to pay tax on it for your annual income. When you do your taxes, you add it to your whatever other incomes that you have, whether that's CPP, old age security, rental income. If you're still working, you have other income, well, that minimum RRIF withdrawal will be added to your yearly income, and you pay tax on that. But the minimum, let's say it's $4,592, that whole amount can go to your bank account without any withholding tax. Now, if you need to take more than the minimum, which actually the next number 3 is, I'm jumping ahead. I'll jump ahead to number 4, but I'll call it number 3. There's no maximum withdrawal limit. And so if you have a $500,000 RRIF, congratulations, you did a great job. You can take the whole amount out if you like. Nobody's going to stop you. Well, someone might talk to you about making the proper tax planning, because if you do take the whole amount out, it's like taking a $500,000 paycheck in that year. And of course, you're going to be taxed at having income of $500,000. So that might not be the best situation. However, the minimum, like I said before, there's no tax on it. There's no withholding tax. Sorry, there is tax. It's taxable income, but there's no withholding tax held back by your financial institution. But any dollar over the minimum will have the standard withholding rates that you might be used to if you ever took money out from an RRSP. And that's the 10%, 20%, and 30% based on the amounts that you take out. You know, anywhere from 0 to 5,000, that's a 10%. 5,000 to 15,000 is 20%, and over 15,000 is 30%. All right. Withdrawals are, well, I don't know how I came up with these. So number 4 now, withdrawals are fully taxable. I did talk about that, but what I didn't say is that when you do your withdrawal, the way that you announce to the tax guy, your accountant, or if you do yourself, is you will get a T4 RIF, T4 RIF slip that will tell you how much you have withdrawn from your RIF for the year, and if any tax has been taken off. Because, by the way, even though the minimum is not tax, is no withholding on it, you can instruct your financial institution in most cases to say, hey, you know what, I don't want to pay more tax at the end of the year. Go ahead and keep back 10% or 20% if you want to do that. Okay. Finally, somehow I've got to number 5. I'm going to double check I got everything here. If you don't need a huge amount of income from your RIF and your spouse is younger than you, then you can use your spouse's age. You still have to have your RIF. You still have to convert it to a RIF at your age 71. But if your spouse is 5 years younger than you, then you can use your spouse's age to calculate the RIF minimum withdrawal. And again, that is calculated based on a percentage that's announced to us by the government, and it's based on your age. So the older you get, the higher the percentage that must be taken out. All right. So let's go this one more time. Number 1, RRSPs must be converted to RIFs at age 71, December 31st at the latest. Number 2, you must make a minimum annual withdrawal. No new contributions are allowed to RIFs. Number 3, withdrawals are fully taxable and you will get a T4 RIF slip. Number 4, no maximum withdrawal limit, but there will be a withholding tax over the minimum amount. And number 5, you can use your spouse's age to reduce minimum withdrawals. I hope that this has been helpful and you got it out of it. Please put some comments and ask any questions. If there's other questions you have about RIF, put them in the comments. I'll be sure to answer them. And thank you so much for your time. I hope this is valuable to you. Bye-bye.